Hey everybody, welcome to today's edition of the Daily Market Commentary. It is Tuesday, the 23rd of January. I am your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day, as fun and exciting and maybe even as boring as it was. Let's go ahead and dive into it. Did not do a video yesterday. I'm actually traveling with my boys, and so I don't have my sound system with me, so you may notice that the sound is a little bit wonky today, so sorry about that. But hopefully you can hear me all right. But in not missing and not catching the video yesterday, I will go over a little bit of yesterday's movement along with some of today's. And I did leave the lines on the charts. For those of you new to the channel, we leave the lines on the charts so that you can see the results of the trades. I did go in earlier today and post a little bit of a Twitter update on some of the trades that we had running from over the weekend. For those of you that were able to hold them over the weekend, I will tell you I did not. Just was not willing to jump in on the Friday on some of these things. But it didn't mean that you didn't get another bite at the apple. So let's kind of cover that. So the S&P, let's go ahead and get rolling on the S&P. So the ES, we had a breakout long above this 2809 number. Now here's where we broke out on Friday. Sunday, we came back down into the area, giving you another bite at the apple. And then Monday morning, boom, that's where we got the pop. It was a very nice pop. Out of that level on Monday morning and has continued to run up ever since. We've got a little bit of a pullback at the end of the day today, but that being said, I'm going to remove this line now as this is no longer going to be valid, but still a very nice run up out of that particular region. Could get a reversal back into this area here a little bit later. This is a very potential buying opportunity, this 28.26 by 28.21, if indeed price comes back down into there. Looking at that on a kind of a trend following basis, if we look at that as a trend following number, it would be actually really good if it's a nice slow burn back down into this area. A nice slow burn back down to this area would put us right back on a rising trend line. The breakout that we had on Monday actually pulled us away from what was already an essentially a parabolic straight up movement. Looking at the Nasdaq. So the Nasdaq also got the breakout to the upside. So those of you that were able to catch on the Nasdaq's move, Nasdaq is our highest performing market right now as we're heading into a bit of an earnings season, an earnings period. In the Nasdaq, once again, very similar to the area that we have in the S&P, 6,900 by 6686, formed around the same time, early afternoon on Monday. After the first thrust, it's a little bit of a pause, and then another run higher. So those are our two major U.S. equity markets. Crude oil. So crude oil definitely got the bounce down into the hourly area that we had talked about, and it is still been able to hold. So some of you may still be in this thing. You got, if you didn't catch it right on the first initial bounce, you actually got a little bit of a fairly deep pullback on Monday, and we've kind of continued to run up from there. As it stands right now, this area is still valid, still something we could use if price does indeed come back into there. That support is still going to remain there. But for now, we're going to leave that one be. There's nothing for me to add. Gold. So gold has not given us any sort of a strong pop. If I go to a daily time period, you'll see that today we got a pretty good move up on gold, but no super strong pop on the daily charts in gold. Still, from a bigger picture scale, there's plenty of opportunity in gold to run up from its current price point. And if I go down to the 15-minute time period, I do like this area down in here. Now, once again, anytime it's on a 15-minute time period, we're going to have a smaller window of probabilities, so we got to be okay with that. But inside here, you see we've got that one little sideways before, boom, a big straight up movement. So I think that could be a good opportunity if price does give us a little bit of a pullback in gold. Looking at our bond market. Now the bond market, let me cover this one first. So the bond market, had I done the video yesterday, I would have very clearly said, woohoo, good job on our bond trade, as the bond market came down, hit our entry, and then moved away almost about a 3-to-1 reward to risk, and then came to our opposing area. So this bond area worked out like a charm. And then the second time we came into it, it failed. Which we would expect, right? So hopefully some of you, and had we had been on the video yesterday, we would have removed those lines yesterday. So as I look at that, though, what it has put in at this point is a little bit of a double bottom price movement, right? Winner, winner, chicken dinner. You see the W there here at the bottom. Broke out above this area, and now it's retested. I think there's a good chance it'll get us up to our potential resistance, our selling point that exists up here. The Aussie still hasn't come into the area that we've got highlighted and identified, and then there's nothing above me that wants to sell the Aussie at this point. Same thing with the Euro. Now, I did think the Euro was going to have a better chance of getting into our opportunity. Did not get there. When I look at the Euro on a daily, going back to a daily, you can see we've kind of just started basing here. I've got to go all the way back to a weekly to point out this area right here, where the Euro's got some consolidation in right in through there, and a little bit of basing, but that's been, you know, kind of chopping around below it. I am not going to take a breakout long on this. I'm very tempted to take a breakout long, but I'm not going to because of that consolidation on the weekly time period. Canadian dollar. So the Canadian dollar was another one that, had I been on yesterday, would have said, woohoo, the price moved nicely out of our area. And then the next time it came in, it didn't move so well, and then it actually came back out a little bit before then breaking through the area. So Canadian dollar, depending on your aggressiveness to take profits, did work out for a period of time. I will tell you on that one, I'd be okay if you took a loss, because it didn't move all the way down to the opposing area of demand, you know, that would exist right in this area. So this support that's here, we didn't quite reach it. So if you didn't get out, then I could certainly understand why, and that's okay if you take a small loss. Just control those losses. Looking at the Great British Pound, Great British Pound's continued its slow march up, and I say slow, but it's really only slow compared to everything else. While copper was unable to get us into the position, into the area, and the Japanese yen is still hanging fairly high off of any high quality areas. The Japanese yen could be a breakout candidate. When I look at it on a daily time period, we do see that there's room to roam. So keep an eye on the Japanese yen. I may add this one to my daily breakout watch list. And real quick, want to take a look at Nat Gas. Now, Nat Gas, when I look at this on an hourly time period, we can see hugely bearish reversal pattern being formed right here. If I go out and look at it on a 4-hour time period, it's even more ridiculous to see that instantaneous, straight-up price movement with a huge reversal pattern in play. Now, this reversal pattern started almost just about at the gap fill, right about where the gap fill occurs. So this is telling me that there's, especially for an hourly time period, once you get lower than the prior candle's low, you've got a decent little move, at least down to 344. So just something worth considering. With that being said, thank you for joining us on today's video. If there's anything I can do for you, certainly feel free to reach out, and I will talk to you all soon. Thanks. Have a great day.